This is Crypto Lion, and welcome to my video on Boxing Day. So today we're going to talk about a number of different things. One, the possibility of Bakkt being delayed, why the market is going down, and what the cryptocurrency market needs to do to stave off the bears, and why it's going down and what's causing it to go down. Sorry. So let's get started. So over the last few days, last couple of days since Christmas Eve, the market's sitting at 101 billion pounds, which is around 128 billion dollars. Bitcoin is down. It's broken its support level. It's sitting at $3,800. Like I mentioned in a previous video, $4,200 was a support level, so it's dropped. I mean, 24-hour volume generally for the market is still pretty good, around 18 billion, which is for a Boxing Day, Christmas Day, not bad. What's causing this? And as usual, everything I express in this video will be my opinion. I should always start with that at the beginning. Please do your own research. If you would like any hints and tips about cryptocurrency, please message me or comment below. But yes, let's get back to it. So what's been driving the market up until now? I think there's been a talk of this Santa run in both the traditional markets and the cryptocurrency markets, and usually around this time I guess there's a lot of positivity in the market, and you've got people looking to invest. Obviously things have not worked out this way. If we look at firstly the Dow Jones has slid down at 2.9, and S&P is down, and I think the New York Stock Exchange has also seen a decline over the year actually. So the Dow Jones Industrial Average DJIA minus 2.9 finished 653.7 points, or 2.9 percent lower than the 21,000, marking its lowest close since September 2017. While the S&P 500 index fell 62 points, or 2.7%, to 2,351, representing its lowest since 2017. So it's not massive drops, but unfortunately, it's a sign that all the markets, so you've got the Dow, you've got the S&P, you've got the Nasdaq, and also the New York Stock Exchange, all reporting drops in its exchanges, and it obviously people get a bit nervous around the fact that money is falling, the markets are falling, so they start dumping money into gold, which is at the moment your store of value, which prices don't really fluctuate. So people are taking money out of the market, and the biggest losses in the traditional markets are tech stocks. So your Apples, your Amazons, and then things like Netflix and Microsoft. So they're obviously losing money, and cryptocurrency is seen as a tech industry. It's built on tech. There's no other way to look at it, and obviously it's a risky business. So at the moment, with the market sitting at 128 billion, which is roughly about a seventh or eighth of an Apple or an Amazon, it's not strong enough to hold its own at the moment. Now, when we were sitting this time last year, around 800 billion or 600 billion pounds, there was strength in the market, but still not enough. What's happening is people are pulling out of the cryptocurrency market and dumping their money into something a bit more secure, like gold, like silver, maybe some bonds, or just keeping it in their bank accounts. And these sell-offs are causing these price dips. So let's take, for example, Bitcoin. So if you look at the last 7 days, you've obviously got over December, obviously it dropped a little bit, and then you've got a nice straight line up over New Year's Eve, and obviously over the course of the day, and then you just got a sell-off here. And at that point where it kind of broke its support of 4,200, it was only going to go one way, and that was going to be down. Obviously, it's slightly leveled off here now, and it's sitting comfortable-ish around $3,700 to $3,800. We kind of need to get past that $4,000 again. But again, there's small factors which cause big impacts in the cryptocurrency market at the moment, and it really needs to, in a one way, have a bit more stability in its own sort of valuation. And things like the launch of Bakkt, which may be postponed only possibly for a few days. I think we covered this a couple of days ago, but it's not news that we necessarily want to hear. The fact that we're still looking to get the CFTC approval, and obviously with Washington or the government, in quotations, being closed due to this Mexico wall debacle, things aren't going to be pushed through. And it might, and as the article mentions, it meaning the delay could just be a matter of days. That just doesn't give much certainty to a launch of something that we've all been waiting for, and we're all kind of almost pinning our hopes on this one item which can kickstart the bull run. And coupled with that, something I came across yesterday on Bloomberg is, Wall Street quietly shelves its Bitcoin dreams, and it's got quite big names: Goldman Sachs, Morgan Stanley, looking well. We don't know yet, and we've had articles from Bloomberg and Business Insider where articles were written negatively. Where last time I think it mentioned that Goldman Sachs were shelving the Bitcoin desk, and then the price massively dropped, and then the next day Goldman Sachs came out and said that's not true. So it's hard to tell how accurate this story is, but nevertheless, if it hasn't already caused ripples, it will cause ripples into the market in terms of price dropping or people selling off. And obviously the article then talks about the fact that people aren't that interested, or especially with the fact that the even after the plunge that it raised 7 people, there was still value in the market. But people, certain areas, for example, I think the article talks about Barclays, who actually had a someone heading up the desk who's left now, and someone else has come in, so there's uncertainty there. And obviously, take Goldman Sachs, which sought its position itself at the cutting edge digital assets that skeptics see mainly as domain of day traders and anarchists. Progress has been slow, as it's barely noticeable. According to people familiar with the crypto business, many of the industry now say it's quite antiquated to have expected last year's frenzy translating into Wall Street crypto offering. Now, obviously, this is just an article from Bloomberg. We have to take a pinch of salt because they are obviously in the traditional markets themselves. At the moment, Bloomberg is one of the number one leading trading applications in the world. In the company I work for, around 90% of the traders use Bloomberg. It's all traditional markets. So I don't know what angle sometimes these companies come from, and are they just being ultra bearish themselves? But nevertheless, this article will be read by your traditional traders, your traditional companies. They'll all be reading the Wall Street Journal or Bloomberg or the FT or newspapers like that. So this is obviously not helping the market, and really what needs to happen is we need to continue like we were doing last year. Although the price was going down, we had a strong sentiment that there was a lot of work going on with a lot of projects, things like EOS and dApps, these big things, and smart contracts. And the main thing is what's really going to push the cryptocurrency forward, regardless of Bloomberg's article or Bakkt being delayed slightly, is real life, real world situations where stuff can be used, cryptocurrency can be used, like your XRP. a lot of good news is coming out. EOS with their scalability, and then you've got your other projects, even the smaller current cryptocurrencies. Something I've not mentioned on this channel before, but something called Encash, using things like digital tracking in India. It's very small scale at the moment, but trying to use real life situations. And the other thing is scalability and transfer speeds. And we need scalability. We can't have a market where we're transacting hundreds of thousands, or if not millions and millions of dollars or pounds or fiat currency worth of any cryptocurrency, and it's taking a delay. So we need speed and scalability, and the people like the head of the people working on EOS, or Vitalik Buterin at Ethereum. These guys are working on this. Obviously the Ethereum project has taken a bit of a step back at the moment, and we're not quite there yet with its scalability, but the other sort of teams are coming up with the good ideas. For example, Tron, who's claimed somewhere around 5 to 10 million transactions per second. Now obviously Tron's a bit of a funny one for everyone because it's got a lot of news and then no substance generally, but things like that is going to push us forward. So we need to hold on to our currencies. We need to look for the good news and promote the good news. The bad news will always be there. We're potentially going into a bear market in traditional markets at the moment. We'll see how January hangs in the balance. The first quarter of 2019 will be quite important for both cryptocurrency and traditional markets. So hopefully, fingers crossed, we're all going to be okay. But that's my short video on that. So let me know what you guys think. Thank you for listening, and then I'll see you on the next video. Goodbye.